Good morning, traders. It is Thursday, May 29th. Taking a look at the charts, we got pretty good price action going on. Not a whole lot of a surprise in terms of the market washout low that we saw a couple days ago. We saw this panic level selling closed at a level of 10, which tells us over the next 1 to 3 days, we should see a significant washout low. The market's going to probably want to push higher. And of course, we can see that on the daily chart. Significant low. It did gap lower on the 30-minute chart, which is an exhaustion gap. And then we've seen it kind of do the gap and go, or a reversal more so. Overall, looking at the chart, we had earnings with NVIDIA last night. So we definitely saw the tech space move higher. NVIDIA pushed higher late last night. It's holding its value pretty well. But there's another one moving the markets, especially is Apple. It's fading down a little bit, but again, both of these powerhouses ripped higher last night and sent the stock market up, mostly the QQQ. And we'll just see what kind of traction we get today. Now, overall, if we were to just go and look at the S&P 500, I think the key here is we're seeing some selling take place. So if I just zoom out a bit, you know, we've got this upper range right through here of this kind of market high. This is where the market is struggling. This is a overhead resistance area, more or less. We just color it red as a kind of overhead supply zone. And so as the market pushes up into this area, we're going to keep probably running into some sellers. Whoever bought up here is getting back to break even, and it creates that overhead supply of people saying, wow, that was one hell of a roller coaster ride. I'll just get out here. And so that's what we're poking into. So the market's going up and then some sellers are stepping in. There's a lot of volume up here. It's the same with the NASDAQ. When we take a look, NASDAQ pushing even deeper into this. It ran up in overnight trading and selling back a bit this morning. So there's going to be some overhead selling pressures going on, and we'll just have to see how that unfolds. Interesting enough, yesterday we did see the market close at 3 for our panic selling indicator. Now 10 is an extreme. It usually means we're going to have a standout low a few days later. 3 just means we're probably going to see a little bit of a pop, a little bit of a move. It's short-term panic on the New York Stock Exchange. The general masses are selling every brand name they know. They bought the only brand names they know because the NYSE is kind of the big board. It's you throw a dart, you'll know the name of the company on the New York Stock Exchange generally. And so we saw people dumping shares and panicking out yesterday. Not a lot, but we did see this level hit. And usually that means the next day we're going to see the market go higher. And of course, we ended up getting good news and it went up. We've talked about how the charts paint the pictures and tell us what is likely to happen with price. And then usually news and events unfold after the case that move the market. And that's why we focus on the charts. The charts set us up, they get us in positions, they prepare or give us a mental picture of what to expect. And then usually, chaos hits and news and the markets move and everybody says it's driven on the news, but really the charts were already pointing to this happening. So price leads news. Price tends to be the best gauge of what's going to happen. That's why we read it very close with lots of fine details. Let's take a look at where money else is flowing today. So we do have money flowing into stocks. Bonds are flat. The dollar is down a little bit. I haven't touched much on the dollar recently because it is trying to carve out, see if it can find a bottom here. So it is working its way through. Lots of volatility. Had a nice rally the last couple of sessions. It's reversing down. Had a big gap up last night, and it's moving down this morning. So again, just like the stock market running into resistance, we're seeing the dollar still has a downward trend here, trying to build a base and to see if it is able to get some traction and start to go higher. At this point, it's not doing so. Falling dollar probably helping gold a little bit here. Gold had a sold off last night, and this morning it's starting to push higher. So we're definitely seeing an interesting swing here with big move in currency, big move in gold. Swinging, and same with the stock market. So it'll be interesting to see how this all shakes out. If we take a look over at energies, we have crude oil, relatively flat on the session. Nothing too exciting there. It's really stuck under key resistance, which is around the 65 level, 66. And so it's just trying to figure out what it is going to do. Is this a bull flag and it's going to try and push deep into resistance? Is it going to stall and roll over? We're not sure. But again, we're just going to let it be and let that work itself out. We are still long Bitcoin. Bitcoin has taken a little bit of a breather over the past few sessions, but again, very strong chart. It's had a rally, pause, rally, pause, rally, pause. These are all little bull flags. They all typically point to higher pricing. After a pause with a bull flag, you have the second half of that move continue to unfold. So right now we are kind of just sitting here waiting for it to see if it's going to get some traction and push higher. Yesterday we did see Bitcoin got real close to this oversold level on the chart, and typically when we get oversold, bargain hunters step in and drive the price up, and we are seeing it start to move higher today. So again, we're just letting Bitcoin work itself out. A member did bring up a question: why is nobody talking about the triple top? We've got a top, another double top, and then we've got this potential triple top. It could be. It totally could be one for sure. Or not for sure, but it could be one. But it does have a very strong momentum, as Brian talked about this in the after evening update for ACS last night in the video. Bitcoin has got a lot of momentum. It is set to move higher. If the markets and the stock market does get some traction, Bitcoin is ready to rip higher to another leg up, with potentially 135 being the upside target. If it does, obviously, if the stock market runs into resistance, then we're probably going to see this sell off and go right back down, and could go a whole lot lower. So we just have to let the markets figure out what they're going to do. We're long Bitcoin with our band strategy, and just holding tight with the balance of this position to see if it's going to continue to push higher and drag up our protective stops, and just see where this goes overall. Now, I've shown our ACS strategy signals a few times here. I do want to touch on a couple things just to show where, some of the value, or a good chunk of our value, is in what we do. And that is obviously managing our risk, avoiding market drawdowns, profiting from market drawdowns or falling markets. And our strategy told us to get out of both the S&P 500 and the QQQ right over here. We were able to sidestep the 20% correction and all the noise and chaos and stress that comes with it. And the market has turned back up, telling us, hey, we've got a new momentum trigger to the upside, and we've hit a target, and now the market is trying to figure out what it is going to do. Now, being able to avoid this is worth its weight in gold. You never know how far something is going to roll over and sell off. It could just keep on going for many months or years. Sometimes it might only last a couple of days and turn back up, and we end up getting long. But we have to always protect ourselves. When the market tells us something is up, it's going down, we don't want to hold it. One of the interesting things is here, we got out here and we got back in over here. So not only did we exit near the market highs, we avoided the chaos. We were able to move into a position and just earn interest and dividend payments. So our account kept pushing higher as the market was going down, and we got to avoid all this. And then we got to buy into the stock market at 5.6% lower than we got out. And now here we are back up, above where we even exited, and we've already locked in profits, and we're pushing some nice gains here with lots of upside potential if this market continues to get traction. So this is what our strategy does. We have 5 to 12 trades a year, which isn't much if you're an active trader. If you're an active or a passive investor, this might seem like a lot, but this is what we do: is we avoid chaos in a very controlled way. We move into positions, we manage risk, and the value is all of this, knowing we're not going to be holding something falling, knowing that we can still generate returns and growth while the market is falling and we're not in the equities markets, and then we can buy in at a lower price sometimes and continue to grow our account before the market even gets up to all-time highs again. So that is, really important to understand. And it's not about getting into all this noise and all the sectors ripping around and all that stuff. What we do is we focus on ETFs only, and it's a very laid back, easy way to navigate the markets if you just follow the trades that I do. And as most of you have kind of realized, it's a very somewhat relaxing way if you can let go of your own emotions and follow the strategies and just follow the money. Who cares what the news is that's causing potential movements in the markets? Anyway, just before we go, I just want to touch back on the stock indices in general. We are pushing up into a major high, major top here. Things are starting to get volatile. We have had a stronger pullback. We've had a very strong push up. So volatility is increasing. Usually that means we're getting closer to potentially a turning point. And when it makes sense, we're getting up to a previous high. It is interesting to look at seasonality wise. While we don't take this into our trading strategy, typically it's the sell in May, go away. Usually after May, come June, it's usually the market goes into a weaker summer kind of doldrums and pulls back into October. So we are getting very close. We are 2 days away from more or less June kicking in. And not only seasonality wise, is that when people start to sell their stocks and start to move on to greener pastures, but the stock indices are pushing up into resistance and showing signs of volatility and a little bit of weakness there. And if we just take a look at our hot list, notice pretty much all of these sectors in this top range here are all the very speculative sectors. And this typically means the market is, people are very comfortable. They're bullish on the markets. They're using leverage. We got lots of people piling into what they think is going to be the next huge run. And typically when everybody's bullish into the very risky stocks, the aggressive stocks, fast moving stuff, and markets are hitting resistance, then we tend to see the market want to stall out and reverse down. And somebody wanted to touch on the VIX. I haven't looked at the VIX in a while. I don't really use it too much for my analysis, but overall it has been coming down. The VIX it's not super low, but it is definitely low. There's not a lot of fear in the market. And, when the VIX is low, it's time to go. I wouldn't say it's super low at this point, but it is definitely, people are comfortable with the markets. They're not too worried. And if the VIX, if the market starts to roll over here, we could start to see the VIX pop and spike up. Last but not least, we'll quickly touch on bonds. I know a lot of you carry bonds in your portfolio. Obviously, definitely in a downtrend. In a best case scenario, it is in a stage 1 basing formation, which, as we know, stage 1 is a kind of a dead zone in the markets. Typically, we don't really want to be holding anything in a stage 1. Stage 1 base, as we can see on this chart, is a sideways. It's shaded red. It's also kind of over here, flat base. And it's shaded red because it's a dangerous, you never know how long it's going to go. Could take a month, could take 5 years. So it is dead kind of money, and it chops around, and you never know if the bottom is in. So we usually steer clear of things in stage 1. And obviously we have seen bonds put in a major top. Eventually they broke down and broke down into an even bigger stage 4 kind of decline phase. And now it is trying to potentially put in kind of a stage 1 base, although it is threatening to break and hit some lower lows. It is making lower lows, lower highs, it has potential here to roll over and continue to sell off. And we've been seeing a lot of fear in the markets and with the yields. If we take a look at the 10 and 5 year, they continue to be moving up. We've got higher lows, higher highs. The 5-year yield very similar. It's building a little bit of a base. We could see a very strong pop or drop here in either direction, and more or less it's going to play directly into the price of bonds. So people are definitely a little bit nervous of the United States, what's going on, and rates are trying to potentially move higher here, and that will hurt the price of bonds. So again, if you're in bonds, it is obviously a pretty painful ride. It has been dead money for several years, and it just keeps kind of grinding lower, and it does have potential to fall even more. Around 81 a share is where the next price pattern shows that it could tag, and then again we'll just have to reanalyze from there. But just keep in mind, if you're in the bond market, it could still be down here for a long time. I don't see yields dropping anytime soon, and we've got a lot of things happening where yields could stay the same or push higher, which is just going to really kill the performance of bonds. So it could still be in here for another year or two potentially, depending on how the markets unfold. Anyway, that's it for now. Talk to you soon. Bye-bye.